Tesla, my Tesla.
Far this year, down 27%. There's been a series of issues from stock analysts, stock downgrades, a dip of shipments in China, and the latest, an arson attack on Tesla's plant in Berlin. Joining us now is Tim Higgins, a Wall Street Journal reporter, and a CNBC contributor.
Arson attack.
And,
of course.
Tim, it's good to
always
see you.
Something,
it's not like,
man. The flipping flapjack and hurricane.
We hear great things about the entire EV market every day either, Tim.
Yeah, absolutely. It's a tough place to be playing, but for Tesla, it's all they're playing with, right? And the underlying story for Tesla has been about incredible, rapid growth over the last few years, and now Elon and team are suggesting that's going to be much slower this year. And all of these signs in the last few weeks and months are really kind of making it even more worrisome just how slow that growth is going to be. One of the remarkable things about Tesla is if you look over the last 3 years, for example, the first quarter has shown growth that's been better than the fourth quarter, which is really rather remarkable if you think about it, because who wants to go buy a new car in winter and kick the tires, right? But that is just kind of underscores how much growth there's been there. And now there's real concern that maybe this quarter won't be as good as last quarter. And that's worrisome to some people.
Do you think eventually that some of the mandates that we've had from the Biden administration, do they get pushed back? And does that matter to Tesla? Is Tesla dependent on I mean, I know that certainly subsidies help, but on the mandates to get to a certain place by 2030, if that gets pushed back, would that hurt Tesla?
Well, the tax breaks that have been passed certainly help make these cars more affordable for Tesla. Now we've seen them expanded, so Tesla has them again. Without a doubt, that helps as Elon fights to get every penny of cost as he can out of those vehicles. But he has argued in the past that he's not dependent upon these sorts of things, that his goal at Tesla is to make a vehicle that is cooler, is better than a gas car, and that will be what appeals to people and drives kind of that EV transition. And in a lot of ways, that has been true for Tesla. It's the other competitors who really seem to be struggling to make an offering that can compete with Tesla. People want a Tesla. Maybe they don't necessarily want an EV.
Does the general malaise...
No, what he just said there is 100% true. People don't want an EV, they want a Tesla. It's accurate. I mean, you look at everybody else's numbers. It's not like Tesla's the only one making EVs nowadays. It's not like it was 5-10 years ago. Now, pretty much every single auto manufacturer out there has an EV in the market, and they don't sell. And even the companies that are, producing just solely focused on EVs, the Rivians and the Lucids, their numbers are absolutely horrible. And I'm not just talking about bottom line numbers. Those numbers are going to be horrible. I'm talking top line. You hear the guidance for deliveries expected for Lucid in 2024 and Rivian, it's horrible. It's clear as day people want a Tesla specific, right? They don't want necessarily an EV specific. And so, it just shows that Tesla has a superior product in the market that people want. And at the end of the day, they'll it's no different than the smartphone. It wasn't like people just wanted a smartphone in general. They wanted an iPhone, right? And, obviously Apple captured insane market share in the United States of America, for instance, right?
It's been pretty staggering to watch how quickly things can change with the whole perception of EVs. But the infrastructure build out, that's going to happen no matter what. I mean, if people sour a little bit, the demand is not there for EVs, they're still going to build the charging stations, right?
Right. We've seen kind of huge investments by the automakers other than Tesla, and they're kind of pulling back some of the speed of that. But we're also seeing the investment go into chargers. The charging network, it perhaps is one of the most important thing to kind of pushing forward that adoption. When you talk to consumers like I do, you hear that concern about, hey, where am I going to charge this thing on my road trip to see grandma? Even though for most people, charging at home is probably the best route.
This man does look like he would go on a road trip to see his grandma. He looks very nice.
Lives at a place where they can charge. So this is kind of one of the big kind of chicken or egg issues that we see out there.
You probably saw Andrew's Deal Book interview where I don't think Elon really worries about about what people think of him. Certainly doesn't worry about what Bob Iger thinks of him. I remember you probably saw that. So what can you tell me? It was a New York Times report. What do you know about Elon Musk meeting at Mar-a-Lago with former President Trump?
So it'd be a natural partnership. We've seen the evolution of Elon Musk since taking over Twitter, since kind of this idea that he's kind of against the idea of the woke mind virus, that idea of being over politically correct, over kind of liberal leaning. And you saw really last May or so kind of his kind of moving more and more into politics, almost trying to be a ringmaster, if you will, in that kind of road to the White House, whether it was kind of welcoming the DeSantis campaign into the big fight, or hosting other candidates on his platform. As we've seen the field narrow to Trump. If you're like Elon Musk, and clearly he's voiced opposition to Biden, Trump would be the pragmatic choice at this point. And the question would be, what can they both get out of it for each other, right? They're both very transactional. Elon has a lot of business with the government, and Trump, could use probably some allies in that fight on the social media world, where Elon can kind of amplify with his echoverse all of these kind of thoughts and political messages.
And they both have been known to tweet first and ask questions later, too, I think.
Absolutely. I mean, here are two men who have really mastered the art of the tweet, right? I mean, embracing populism in a way that is remarkable.
Some wacky, both of them.
Yeah, I don't think what they're talking about there is going to happen. I think they're kind of talking about almost like a partnership, almost like a full-blown Elon Musk endorsement of T-Man. I don't know if I necessarily see that happening, although, definitely, if you kind of read through Musk's tweets, he leans toward one side. That's pretty obvious, but I don't know if he really wants to go there. I don't think Elon really wants to wrap his brand in anyone else's brand. I'll put it like that. It doesn't matter who that person is, whether they're a president or a former president or anything like that. I don't think Elon ever wants to attach his personal brand too much to somebody else's brand, even if that other person has a potential successful brand in their own right? So that's kind of my 2 cents on that. We'll see, though. Tesla, my Esla. Oh, yeah, baby. So Tesla, as of today, is trading about $180 a share. Stock's down about 9% in the past year. If you're new to my channel, I've been a Tesla shareholder for a long time. Okay, before everybody jumped on this bandwagon, I've been on I've been in this car for a while, and it's a roller coaster ride of a stock. It really is. The highs are really high in regards to Tesla, and it just seems like there's no top, and the lows are really low. And just to be quite frank, over the last year or so, we've been going through a lot of lows in regards to Tesla for really a year and a half, 2 years now at this point in time. It's been, it just seems like, there's just always bad news. Once you get good news, it's too bad news to, kind of override it. At the end of the deal, I keep it simple, okay? They got the strongest product lineup in the game. From the luxury side to the mid-size side with the 3 and the Y, they've got the Semi in the market now, and then Cybertruck starting to ramp with Robotaxi coming, right? They got the strongest product lineup out there. They also have the coolest, maybe the coolest brand of any brand in the world. I mean, who else is doing this? You see these celebrities? I mean, I'm not just talking about celebrities. I'm talking mega celebrities, like the biggest celebrities are like driving the Cybertruck around, right? This is great. They said, Elon Musk, you responded, somebody said, well, they clearly have great taste. Important to note that no one receives a discount, including me, and no one is paid to promote our products. This is these mega celebrities going out of their way. The Lady Gagas and the Jay Lenos and Serena Williams and Kim Kardashian and Pharrell and Justin Bieber and all these people, right, are going out of their way to drive the Cybertruck because it is that cool. And at the end of the day, they know if they take that out, that's the coolest vehicle. Doesn't matter what Lamborghini you got. Doesn't matter what your Rolls Royce is or your Bentley is. At the end of the day, the coolest person is the person who pulls up in the Cybertruck. It will be the one that gets all the attention. You got an Aventador, it's just another Aventador. You got a big boy Rolls calling in, it's just another one. You got a Cybertruck? Oh my gosh. Bring out the cameras. That's the bottom line in regards to that, right? Now, short term, we've got things working against us. Interest rates are high. Chinese economy is bad. Margins are low, which, by the way, Tesla's margins even recently are actually really good compared to most auto companies. Just for Tesla standards, they're low. So the thing is, you got to ask yourself, are these the things that is the Chinese economy always going to be bad? I don't think so. Are interest rates always going to be high? I don't think so. Are Tesla's margins always going to be low? I don't think so. Those are all fixable things over the long term. Meanwhile, look what we have going for the long term. EV adoption is going to continue. The internal combustion engine is on its way out. Like, there's no debating that. It's on its way out. It doesn't happen all in a day, but over the coming years, going to be less and less and less of those on the road and more EVs. And every time you're going to look at the data, it's going to say more EVs, less internal combustion engines. Self-driving vehicle adoption is going to continue. Autonomous taxi networks are coming. It's not like that we're just going to go past that and like, oh, no, that's never going to happen. No, that's coming. Just wait on it. Battery cost continues to drop. The company is still scaling several factories. I mean, you would have thought 5 years ago they had already scaled up Fremont to max potential, and yet somehow year in and year out they blow the numbers out of the water. So they're still scaling in China. They're still scaling in Europe. They're still scaling in Austin, right? And then when Mexico comes online, they're going to be scaling Mexico. Company is still young in the margin story. That's the other thing people got to understand. Like, Tesla is so young as a company. I mean, this company wasn't even at scale 5 years ago. Like, they really just got to scale in like the last 3 years specific, right? And so, this is very young in the margin story. They got a lot of 5, 10, 15, 20 years of margin to capture here, okay? This is, everybody gets so caught up in the year-by-year changes. It's like, I'm worried about where Tesla's margins are 10 years from now. Services is going to grow into a giant over this next decade. I mean, when you think about the service opportunity from the supercharger network to, maintenance of vehicles or maintenance of a fleet or, things that break on vehicles in-app purchases, satellite maps, self-driving capabilities. I mean, my gosh, the services opportunity is unparalleled. And that's going to grow into a giant, and it will start to be respected as a giant, but it's going to take a while to get there. No different than Apple services was not respected for a long time. And Apple services really started getting respect about, 4 or 5 years ago. And so Tesla services, probably 4 or 5 years from now, everybody's going to look at that and be like, whoa, this business is huge. I keep watching that number grow and grow and grow, and I'm like, how's no one paying attention to this? This is like the story for me. Tesla will continue to out-innovate their competition by a mile, if you want to even call them their competition. But not only will Tesla continue to out-innovate their competition, they're going to continue to out-innovate almost anybody that you even want to put in the same sentence as them. They've got one of the top CEOs in history at the company. I mean, who's done more than him out there? That's amazing, right? Elon Musk. And they got one of the most talented, motivated workforces in the history of mankind. And so these are all things that are long-term, all going in the right direction for Tesla. So when I look at this story, I say, yeah, the short term, that sucks, man. Those things really hurt. But when I think about the next 10, 20 years, I'm like, those things look pretty flippin' flapjack and good there. Now, I like Tesla stock under $200. I love the stock under $150. If it can go under $150, ooh, man, then we're really, really talking in regards to this one. So I'm kind of hoping for more short-term weakness, but I'm not that confident. I'm not that confident because I do think the management team could signal a bottom in margins within the next few months. And if they do that, then the stock could actually start to move up quite rapidly, because then everybody would be like, oh, margin bottoms in, and things would start to roll from there. So Tesla, I like Tesla. Next one up here, JP Morgan CEO Jamie Dimon on the state of the U.S. economy.
For high yield and leveraged finance conference in Miami, you've got executives, deal makers, investors, all kind of coming together to talk about the financing environment. How would you characterize C-suite confidence levels now?
First of all, thrilled to be here. Thank you for doing this. This is our 29th conference. I've probably been to 20 of them since I became CEO of JP Morgan Chase. Look, you always got to look at markets that they change their mind pretty quickly. But right now, confidence is up. There's more M&A chatter. Equity markets open a little bit. Spreads are getting close to historical lows, which means there's a lot of money chasing high yield deals. So things are kind of open. Markets are high. People feel it. So far, so good. That
sounds to run somewhat counter to your more bearish views. I know you said in fourth quarter earnings that last month that inflation may be stickier, rates may be higher than the markets expect. Is that still your base case?
Okay, wait a minute. Wait just a flip and flapjack a moment. That's not necessarily a bearish view. That's a cautious view from the, arguably the most important man in all of finance in the world, right? That's just a cautious view. It's not bearish.
What's kind of fueling that more cautious tone right now?
Yeah, so the way I look, remember in 1972 you felt great too, and before any crash you felt great, and then so things change. So you got to look ahead. And I do think there are things out there which are kind of concerning. We've got an eye on, and why are we doing so well? A lot of it's fiscal spending, and fiscal spending has a multiplier too. 100%. So I just think it may not come down that quick, and people may be surprised. So when people talk about, the market is kind of pricing a soft landing, that may very well happen, but the odds at 70 or 80%, I would give them half of that. That's all. 7
or 8 rate cuts?
No, 70 or 80% chance we'll have a soft landing. I give it half that. We may very well have one, but I think there is also a higher chance in the market thinks of rates being.
Whoa, okay, now wait a minute. Wait, just flip and flapjack a moment. Jamie Dimon just got bearish. I'll put it that way. No, he's talking about half that. Okay, half of 70 to 80% is 35 to 40%. So now he says there's a higher probability that we're not going to have a soft landing versus have a soft landing. So that right there, that's not a cautious statement. That is actually a bearish statement. I'll say that. So interesting, very interesting commentary by Jamie Dimon there.
The other thing I think it's always a mistake to do is look at just the year. All these factors we talk about, QT, fiscal spending, deficits, the geopolitics, those things may play out over multiple years. But they will play out and they will have an effect. And we just don't know what they are. So I'm just, in my mind, I'm kind of cautious about everything.
You're hedging.
Yeah.
I want to ask you about commercial real estate. We've got nearly $1 trillion of commercial multifamily real estate debt that will mature this year. About half of that, about $1 trillion, $929 billion worth.
Yeah.
Half of that is owned by banks, mostly regional banks there. The rest is either securitized or due to non-bank lenders. We've seen higher levels of defaults in certain pockets of the market and a slump in property prices recently. Do you think that stress in commercial real estate will ultimately be the source of the next credit event?
First of all, put commercial in perspective with consumer. The consumer markets are far bigger. So what happened in 07 or 08, this isn't that kind of thing. And a lot of these owners of this can handle what you call stress. So in the banking system, I'm just going to focus as an office for a second because there's warehouse, there's data centers, there's hospitals, and some of that stuff is actually well done. But if you take just offices, first of all, they're worth less because of interest rates. When interest rates go up 300 basis points, whatever you own with their cash flow is worth 30% less. And so people, that's not a crisis, that's kind of a known thing. And then there's if you have a recession, yes, it'll get worse. If we don't have a recession, I think most people will be able to muddle through this, refinance, put more equity in. And of course, when you talk about defaults being higher, part of that's just a normalization process. They were so low for so long, so in all of credit, you're watching this, things go up, but they're not at a crisis level, they're just kind of going to normal. So yes, if rates go up and we have a recession, there will be real estate problems. And some banks will have a much bigger real estate problem than others.
So you think, as you kind of assess the landscape and regional banks, there'll be more of a whack-a-mole than a kind of domino effect?
As long as the economy stays like this, there'll be more of a whack-a-mole. There should be no domino effect. The problems you've seen were kind of idiosyncratic problems with Silicon Valley, First Republic, New York Community Bank, and a lot of these, it's very local. I mean, you talk about real estate, I think when you say blanketed, if I call it an office and I have great leases in it, it's fully leased out, 20-year leases, that's completely different than a spec building. So you really got to dig deeper, and we try to do that when we look at credit about where it is. It'll be pockets.
Are you concerned at all about just the migration of lending taking place in the non-bank financial sector? I mean, we're here at the Global High Yield and Leveraged Finance Conference. I know there are a lot of private credit managers here, but that's something that's caught the regulators' attention as well.
Well, finally, maybe wake them up a little bit. First of all, I don't mind competition. Some of these people who you call private credit are excellent. They know what they're doing. That doesn't mean they all do. And when you look at policy issues about private credit, first of all, we've been doing it a long time. Just keep in mind, we make loans, middle market loans. They came through with a bunch of stuff that made it simpler. Unitranche, actually more expensive. Unitranche, different covenants. you could sign it quickly, no pricing. But there are other things: less transparency, less liquidity, no secondary markets, no research. So you got to look at the whole thing: what works and what doesn't work. It will sort through it. We'll be a competitor. I have no problem knowing that we're going to be a competitor. And a lot of smart people out there, they've been on TV saying, I said they're dancing in the street, but they agree with me this time. They say absolutely, banks are being pushed out of a whole bunch of different businesses, and I always say if that's what the regulators want, then do it. I'm completely fine with it. JP will do fine, but it should be done with the forethought, not accidentally. Like I said, there are some negatives. So I think if you have a major recession, you'll probably see some issues in private credit. Whether it's systemic, I don't really think so, but it might be in ways we don't understand today.
Speaking of competition and regulation, last week we saw a major deal with Capital One, and it's...
Before we go further here, it's very, very intelligent move by Jamie Dimon to be more cautious just in general, right? And the reason being is, imagine you actually get a recession. Imagine Jamie Dimon's been out there, last year, this year, and he's, everything's great. It's going to be booming economy, blah, blah, blah. Everybody would come down on him playing those clips. Oh, Jamie Dimon said it was going to be great, and look at, we had a crash and this and that, right? And make him look really bad. Obviously, then JP Morgan would have to let him go. It would be a poor look on his reputation, right? So it actually is a smarter move to be much more cautious and bearish from his angle. I'm just telling you guys, it's much more intelligent than being super bullish, and then the bears situation plays out, and then you look like, a little clownish, right?
Deal to acquire Discover. The potential there is to reshape the credit card industry. The combination would create the largest card issuer in the U.S., surpassing JP Morgan Chase.
For now.
As measured for now. So if this deal is approved, does it create more competition for you?
I think companies should be allowed to do and innovate and grow and merge and try to challenge things. I think that's good. So I think it's a mistake to act like it's bad. It's good for competition. In fact, I think they should allow some of these smaller banks to merge. If that's how they think they can best compete with JP Morgan, you should let them. It may not work in every case, but you shouldn't predetermine that. You should let the market predetermine that. In this particular thing, there's the credit card business, which is they'll be bigger, more scale. They're very good at it. I have enormous respect for Richard Fairbanks and Cap One. And then there's the networks. The debit network and the credit network. The debit network, it may have an unfair advantage versus us. Of course I have a problem with that. Why should they be allowed to price debit different than we price debit just because of...
By the way, it would be fun if everybody walking in the background, had a little thing that goes above their head and it says how much they make a year and what their net worth is at one of these big JP Morgan conferences. That would be quite entertaining.
I don't know what their plans are really. Like I said, I have a lot of, whatever Richard does, I pay a lot of attention to do. Can they actually create another credit card network? I don't know. But my view is let them compete. Let them try. And if we think it's unfair, we'll complain about that. But I'm not worried about it really. But we do track everything he does.
And on that regulatory bucket,
I always make a joke with Richard that the reason I have my job is because of him. Because Cap One is the one that kind of dissected the credit card business. Cap One started to beat the hell out of First USA. First USA, which had been bought by Bank One, collapsed, and it called into credibility of the management, and they hired me. So Richard is why I'm here.
It all goes full circle.
That's crazy. Crazy stories, right? All right, guys, appreciate you joining me. Hope you enjoyed today's video. Thanks so much for being here. Thank you for smashing that like button. Also, make sure you guys get that workshop below. How much money you need to quit your job, how much money you need to retire. Goes very in depth on that subject in general. And I think a lot of you guys will get a lot of value. I've gotten some really good feedback in regards to that video. It's a video a lot of people have been wanting me to do for a while. And I said, let's do it as a workshop. So free to access that, pin comment down there. Much love and have a great day.